Yes, the view, we released our note last week. We think that from what's going on, the MPC may likely maintain rates at the current levels. Yes, the inflation that was released yesterday higher than our forecast. And if you look at the month-on-month growth, it was quite high, the highest since the beginning of this year. Historically, between May and June and April and May, you have a little bit of a spike. But the spike that we observed yesterday was quite higher than what we were expecting. But then if we look at what's the cause of this, food. And we had mentioned this about when we released our report around April, when the NBS, National Bureau of Statistics, released the GDP figure for Q1. And when we looked at the growth in agriculture, which is the biggest sector of Nigerian economy, and we said it recorded the lowest growth rate in 18 quarters. And we attributed that one to the crisis in some food-producing countries, states in the country. Unfortunately, there is little the MPC can do on that. The federal government needs to come and to engage people and to ensure that we solve the problems in the country. And that's the only way we can do it. Even if MPC raises rates today, it will still not reduce the pressure that we're having from our food prices.
Do you anticipate that the MPC will also be putting out a message to the federal government in terms of its borrowing and what it means for the private sector? Because I also expect that there will be some conversation around the slow growth of private sector credit in the economy right now. Because if that doesn't happen, then you really can't expect the economy itself to grow significantly. Because we are sitting at, for the first quarter, growth of less than 1% in the non-oil sector. Your perspective?
It's one of the issues that we raised. I remember that in the last two meetings, we actually said that there is a need for the central bank and even the federal government to stimulate the economy. Growth in the economy is slow. It's not at a level that can ensure sustainable growth in the economy that can also generate good employment or create jobs in the country. So you need to do that. But then you see, we don't need to look at it in isolation. Why are banks not lending money to the economy? We have a whole lot of structural problems in the economy. So it's not just about extending credits. When you extend credit and the money does not come back, the banks will record high non-performing loans, which is not good for the bank. But then we need to look at it holistically. Do we have infrastructure to sustain expansion in credit? I mean, you remember what happened last week when the vice president came to Lagos and visited Apapa, and they had to give an order. On TV yesterday, we still watched that a lot of those tankers are still there. So when you lend money to businesses operating in such a very harsh environment, the money may likely come. So the central bank, yes, they're borrowing from the federal government. Unfortunately, they have to borrow, right? They continue to borrow, even though they are saying they are shifting the borrowing a little bit more to the external sources, which on its own has its own risk because of the rising yield in the international market. But then, for what we are seeing at the moment, yield have come down substantially. I mean, early last year we have treasury bill of 22%, but now about 12-13%, moderate. We'll expect that they will continue to borrow. On the long end of the market, yield may likely rise, but that is not the major problem that we have. There is a need for more like an holistic approach to solving the reason why banks are not extending money. Banks are there to grant money to the real sector to make money.
Right, and of course, as long as there's the option that they can put their excess liquidity in government securities, they will probably continue to do that if there is no incentive for them to move to other more risky assets. Okay, but let's get your perspective on the outlook for the exchange rate, because I was at a forum recently where the former member of the MPC, Doyin Salami, was suggesting that he thinks it's relatively a good bet that the currency is going to be stable for the rest of the year and perhaps even into the election next year. What's your view?
I think I support that view, hinged on the oil price and oil production. The federal government, the vice president also went to the Niger Delta region met with the elders a few months ago, and then they engaged them. We've not had any problem from that region. As long as we have stable oil production, we have oil price that is at the current level, dropped down to about 73 thereabout now dollars per barrel, we may likely have stable exchange rates. Even though looking at the figures that are coming into the country from the R&E window is slowing down, but then the major driver of exchange rate stability is actually the oil price and oil production. So we think the outlook is stable. Even with the election, is not going to have, we don't think that there will be so much pressure. Yes, there are built up of pressure at the moment now. You see what is going on in the external reserve is going down because a lot of people, some people have taken money out and money is not flowing in. But as long as we have good oil price over $70 per barrel, which we think will happen, and we have good oil production, even though OPEC figure for Nigeria shows this coming down. But then we don't have so much of a problem. That will ensure that we have stable exchange rate. Next year, the feel we are getting is that maybe towards the end of next year, Dangote refineries may likely come on board. If that comes on board, the demand pressure for imports may likely reduce by about 25% thereabout, and then
which is significant.
Which is significant, yes. That will also ensure more stability, maybe with appreciation also.